guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're tracking as we start a fresh new trading week. So we have lots to get to, but first up, a look at the global markets, and we'll start off with Asia because it's really not looking good. The Hong Kong markets right at the open are down around 2.6%. They've come slightly off the lows, 2.3% now, but it was almost a cut of 3% when we did start the trading session. Taiwan is absolutely flat right now, just about managing to hold in the green. But for the rest of Asia, you're seeing pretty sharp cuts come through. So Kospi is down 1.2%. You have the Nikkei markets also, which are seeing a cut of 0.5%. And across the board, Shanghai is down 0.9%. So it's definitely looking like quite a weak start for the Asian markets. The SGX Nifty will come up for you on your screen. And that has also slipped continuously in the past couple of minutes. And it is currently down over 70 points in the red. So that's what's happening in the Asian markets. We are likely to get a start in the red, but let's see how the trading session moves from there. For the US markets, Wall Street ended Friday's trading session higher. So the Dow Jones closed up to 200 points in the green. The S&P 500 was up around 18 points, and the Nasdaq Composite closed absolutely flat. But if you look at it for the full week, it was still, a week of red on Wall Street. So the Dow Jones was largely flat. The S&P 500 lost around 0.7%, while Nasdaq Composite, that was the one which suffered the steepest cut for the week. It was down around 1.6%. So that's what's happening in the US. But let's also bring you some important opinion. This comes in from Federal Reserve officials. So let's listen in to what the new Boston Fed President Susan Collins had to say on inflation, the labor markets, and of course the rate hike trajectory going forward.
I do see a pathway to bringing inflation down, which of course is the imperative right now. Inflation is just too high, and so we are moving forward in order to accomplish that task. I do see a pathway in which we're able to do that without needing to increase unemployment more than some modest amount. And I'm not going to put numbers on that. At the same time, I'm very realistic. There are a lot of risks. There are no certainties here. And I do think, though, that there are concerns that we could have a self-fulfilling dynamic that would make a significant downturn more likely. And so it's important to talk about reasons why that is not the only pathway. Not at this stage. I will say that I think it's extremely unlikely to be a zero. We need to go further. There's more we need to do. But 75 still is on the table. I think it's important to say that as well. What I will say is that historically 50 was viewed as a large increase. Yeah. And we're in a range where most people see us as territory that is tightening. And we're starting to see some promising signs, although certainly we're not seeing clear, consistent evidence of the kind of softening in labor markets, the kind of dynamics that we would like to see. The service sector prices are still very high, et cetera.
All right, that is the word coming in from the Boston Fed president, and that's everything that we're tracking globally. But let's talk about all of the cues that you should have on your radar as we start this trading session. We have Ekta, Vahishta, and Nigel all joining us now to run us through the trade setup this morning. Guys, a very good morning to all of you. And Ekta, let me come to you first. We were just going through the global setup. It doesn't look so positive. Looks like the start will definitely be in the red.
Yes, absolutely. Morning, Pavitra, as well as to our viewers. Well, I'll just recap what took place on Friday. The markets ended in the red for the second straight session, but were off lows. FII's net sold around 751 crores, DII's net bought around 890 odd crores. For the week as well, it was just about a flattish close after 4 weeks of a consecutive rise. So there is an absence of cues as we move towards the end of the year. Plus, there is a Thanksgiving holiday in the US this week. So possibly cues on the global front towards the close of the week is going to be lower as well. What is positive for us despite the global weakness is crude prices, which have slipped below $90 as supply fears have receded. Volatility index for us back home is also at a 1-year low. Now, in terms of the global cues, yes, the US closed higher on Friday but ended the week with losses. Asia is largely mixed and in the red at this point in time. SGX also indicating a bit of a softer start. Sector-specific interest is likely to continue for our markets as, for example, we saw with the PSU bags last week, and there is a move towards record highs. So there is is possibly going to be consolidation ahead of that, and maybe some amount of trepidation ahead of that as well. In terms of cues, there is weekly expiry, Fed minutes on Wednesday, ECB minutes on Thursday, and then eventually the RBI policy in the first week of December as well. Just watch out for a lot of macro cues from a lot of the markets this week as well. CPI data from the likes of Hong Kong, Singapore, Malaysia, Japan, all of it is due this week.
All right, Ekta, thanks a lot for getting us all of the cues that we should keep on our radar as we start this brand new week. But let's also talk about the individual stocks that you should watch for. We have Vahishta with the entire list. And Vahishta, it could be a lot about the steel companies today.
Absolutely, Pavitra. Steel companies will be in focus today. Effective 19th of November, the government of India has removed the duties on exports of steel and allied products and reimposed the duties on imports of coking coal and PCI. Now, the export duty of 15% on steel that is removed includes the duties on the hot rolled coils, cold rolled coils, the hot rolled plates and stainless steel. And with this announcement, the stocks that could possibly be in focus are Tata Steel, JSPL, JSW Steel, SAIL, JSL Stainless, NMDC. Moving on, we speak about Aarti Industries, which has signed a binding term sheet for a 20-year period with Deepak Fertilizers and Petrochemicals Corporation Limited for the offtake and supply of nitric acid, which is estimated at more than 8,000 crore rupees. And the deal benefits Aarti Industries by way of a long-term supply security for a key raw material. So some positive news coming over there. Ease My Trip has a board meeting on the 23rd of November to consider and approve the allotment of bonus equity shares. Aurobindo Pharma, there's a completion of US FDA inspection at one of their units, and at the end of the inspection, the company has been issued a Form 483 with 10 observations. RHI Magnesita will be executing a share swap agreement with Dalmia Bharat Refactories to acquire 100% of the equity share capital, and the share consideration has a value of 1,700 crores. Back to you.
All right, Vaisha, thanks a lot for that entire list of stocks. By the way, we also have 2 new listings on the street today, so watch out for those. We have Archean Chemicals as well as 5-Star Finance, which will hit the street, so watch out for those 2 new names. But let's also talk about the FNO cues that we should track, and Nigel has all of that for us. Nigel.
Well, morning. You know, it was a good close actually in Friday's trading session because the Nifty recovered considerably in the last 60 minutes or so. You thought we were going to end closer around 18,200. We ended above that 18,300 odd mark. In terms of flows, the FI as well, it's been a little bit, tepid. But remember, there's been a lot of large trades that are taking place. So for the time being, we'll have to ignore that data point and we'll take the fact that the institutions net were buyers out there. What are the FIs doing in the FNO market? Well, they unbound some longs as well as shorts, but they continue to remain net long on the index with close to around 65% of their positioning on the long side. They're buying both calls as well as puts. They bought more calls than puts in Friday's trading session. However, what's telling you that the bears, they feel they're still in the game is the way they're writing calls. And even in Friday's trading session, well, you had the FIs that wrote calls very, very aggressively. Close to around 2 calls were written for every 1 put in Friday's session. What were they writing? 18,400 call, 18,300 call. Just take a look at the massive open interest surge out there. On 18,400 itself, 50 lakh shares getting added out there, as well as 18,300 call, very, very active in trade. On the downside, though, the 18,300 puts off a bit of open interest addition, and that perfectly punches in with the low of the day. It was at around 18,209. From there, we saw a bit of a bounce. So the broad range comes up for you on the screen. A move towards 18,200, that signals buying, and that, in fact, was the low of last week. And a move to around 18,450, that becomes a bit of a resistance. For starters, the SGX Nifty is suggesting that you're likely to get that dip, maybe a little bit of a deeper dip, and risk-reward will favor the bull. So we'll keep an eye out on that. Back to you.
All right, so let's see how the trading session pans out. Nigel, Ekta, Vahishta, thanks a lot for joining us and taking us through the trade setup this morning. It is time for our short break on the show. But like we told you, the government has rolled back most. Welcome back. You're still tuned into Power Breakfast. Now, the Parliamentary Committee on Finance will meet today to discuss the roadmap for a $5 trillion economy amid geopolitical risks. So top officials of the Finance Ministry as well as the Niti Aayog are likely to appear before the committee. Parikshit joins us on the phone line with all of the details that he has. Parikshit?
Yes. Today, the Secretary, Department of Economic Affairs, the CEO of Niti Aayog, the Chief Economic Advisor, will be appearing before the parliamentary panel at 2:30 p.m. And the parliamentary panel is going to seek views from these government officials as to what is the roadmap for a $5 trillion economy at a time when there are so many geopolitical risks which are also impacting energy security, food security, and global trade routes as well. So the officials are likely to brief the parliamentary panel on the reforms that are needed for a roadmap to the $5 trillion economy. What are the measures that the government is taking to minimize inflation, minimize the risks to the Indian economy because of the global slowdown that we are taking place, where we are placed currently, and how our economic recovery is actually taking place. So the members specifically want to understand how India's growth is likely to be affected over the next 2 to 3 years. Back to you.
All right, Pariksha, thanks a lot for bringing us all of those details. Another important update, the winter session of the Parliament will commence from the 7th of December. This will continue all the way till the 29th of December, and with 17 sittings spread over about 23 days. So that's an important update for you as well. But moving on, let's bring you some important opinion. Adani Group Chairman Gautam Adani says that energy transformation is a big lever for India's growth story and opens up unprecedented possibilities. So let's listen in to excerpts from his address to the 21st World Congress of Accountants.
Given the pace at which the government has been executing a vast multitudinal of a simultaneous social and economic reforms, I anticipate that within the next decade, India will start adding $1 trillion to its GDP every 12 to 18 months, and thereby putting us well on track to be a $30 trillion economy by 2050. And with our stock market capitalizations, that will be possibly exceed $45 trillion. While India currently ranks third in the Renewable Energy Attractive Index and is the world's third largest energy consuming country, there is little doubt that India's energy transitions will be unparalleled as it races to meet its energy needs. By 2050, India will need 400% more units of energy than it currently consumes. While this may seem challenging, the technology advancement that we are seeing is expected to make this possible. The marginal cost of green power is headed to zero. The ability of this zero-cost electron to economically split a water molecule and create 100% green hydrogen in the future is now certain. The combination of a solar and wind power coupled with the green hydrogen opens up unprecedented possibility for India.
All right, that is Gautam Adani on the big opportunities from green energy. So that is an important word coming in. But let's talk about the big news story over the weekend. A CNBC-TV18 news break has been confirmed in a big boost for the steel sector. The government has rolled back most of the export duties on steel and steel products. So Nigel is here to break it down for us and take us through the details. Nigel.
Well, the government of India has rolled back most of the export duties levied on steel products in May 2022. On steel, stainless steel, pellets as well as iron ore with sub 58% Fe content, it's been reduced to zilch, so that's zero. On iron ore with 58% plus Fe content, it's been reduced from around 50% to around 30%. On coking coal, however, they have reintroduced the 2.5% import duty. Now, what could have made the government of India pull back this export duty? Well, the key purpose was to achieve lower steel prices, and that's happened. Additionally, steel demand has been hampered as the export window was shut. This led to steel inventories rising in the month of September-October to the highest we have seen in 20 months. India exported, remember, 13 million tons in FY22. But since the imposition of export duty, it has resulted in the gross exports falling to an annualized rate of just around 5 million tons in that period of from July to around October. This could result as well in a slowdown in capex, which isn't good for the country. That's for India. Finally, the trade deficit numbers have been worrying as India became a net importer of steel in October 22. And the steel imports rose to its highest levels we've seen in the last couple of years. That's since October 2019. Let's analyze the stock impact then stock-wise. For steel players like Tata Steel, JSW Steel, JSPL as well as SAIL, the positive is that they reopened the export option, this particular move. But the domestic prices, they're at a premium in comparison to export prices. Jeffrey says the domestic prices are at a 15 to 20% premium in comparison to landed imports. Stainless steel companies like JSL Stainless as well as JSL Stainless SR, well, they'll be beneficiaries as well. The company earlier exported 25 to 30% of their volumes. That's fallen to around 5%. Additionally, production disruption in Europe, that's going to be good news for stainless steel players. Moving on then, Godavari Power and Ispat, they'll also be a key beneficiary from the reduction in pellet export duty. ICICI Securities says that pellet producers in central as well as eastern India, they have pushed up prices by around 1,000 to around 1,500 rupees per ton. For iron ore producers, NMDC, they'll be a key beneficiary. They don't export directly, but if pellet prices are going to be moving up, then iron ore prices as well will get a bit of a tailwind. ICICI Securities says that Odisha-based miners, they are contemplating a hike of around 500 to around 700 rupees per ton. The import duty of around 2.5% has been reimposed on coking coal, as I said. Nomura says that the coking coal cost could increase effectively by around 600 rupees per ton. In terms of brokerages, we'll run you through a few. Jefferies, they say it's unlikely to provide much support to the Indian steel prices in near term. They have a hold rating on Tata Steel and underperform on JSW Steel. Moving to Phillip Capital, they say it's positive for the entire ferrous pack in the medium to long-term perspective, but offers no near-term benefits at this point of time. While ICICI Securities, they say that they perceive the rollback of export duty as a valuation re-rating event rather than an earnings upgrade. So the stocks will be in focus, but we'll need to see who are the bigger beneficiaries. Godavari Power and Ispat, NMDC as well as JSL Stainless, they will be the key stocks, clear-cut beneficiaries out there. Back to you.
All right, Nigel, thanks a lot for taking us through that entire explainer on what this really means and also what brokerages are saying about this. But with that, it's time for another short break on the show. On the other side, we'll talk about the crude prices. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity space because there's lots going on there as well. Manisha, good morning. Crude is at 87 now.
Oh, well, yes, Pavitra, what a sell-off in last week we've seen in case of crude oil prices, where the prices fell nearly 10%. It actually has been a second weekly decline. So the decline basically has continued, slightly oversold on the charts. But when you see a fall coming in like this, there is momentum further on the lower side here. China seems to be the major culprit here, where we have seen the COVID cases continue to gain up. China also seems to be cutting its imports, not just for the month of November, but the future loadings for the month of December as well. And then you have seen the European supply concerns ease a bit as the refiners have piled up stocks ahead of the winter demand expectations. The next thing to watch out would be the OPEC and allies meeting that's happening on 4th of December. They will review the production policy and the way the crude oil prices have declined. Some statements, another step coming in from OPEC could really be a supportive factor going forward. But that's about crude. When you look at the metal space, we have seen a decline here as well. So whether it's gold, silver, they have come off their multi-month highs. Copper prices fell 7% in the previous week as well. The weak demand expectations from China and strength in US dollar really seem to be pulling down commodities.
All right, Manisha, thanks a lot for getting us all of that action from the crude markets as well as the metals pack. But with that, we're completely out of time on this edition of Power Breakfast. The cuts in the Asian market are only getting steeper. So the Hang Seng is now down over 3%. You have Kospi, Straits, both seeing cuts of over 1% right now. And the SGX Nifty is 85 points in the red. Thanks for tuning in. Bazaar Morning Call is up next.